Right guys, back for another trade execution video looking at BTC. This trade was taken on the 22nd of January 2023 and this is a special setup from my playbook called the Holy Grail. Essentially what that means is when you get a heavily confluenced trade where a sweep into a liquidity zone occur with a divergence present. And yeah, let's get into it. Right, okay guys, so this is where we were trading on the 22nd, and for those of you who have watched my videos, you'll see the structure pretty clearly here, okay? We've got impulse up, we've got demand that was formed, intra-demand during that impulse, then we go on to form this range, and essentially what we have our eye out for here is a continuation play, okay? So really what we want to see is the range low swept into the demand zone, reclaim the range lows, and then start pushing higher, okay? So as always, it's good to get in the habit of preparing yourself for the trade. What do I mean by that? We say to ourselves, okay, here we have clear strength, consolidation, range-bound environment. We've conveniently got the range low placed above this 15-minute demand zone. If we were to get a simple tap into this zone and a reclaim of the range low, would we take this trade? If so, where would our stop be and what would our size look like as well? And in this way, we can think about risk in a very controlled manner, okay? So we're thinking about risk ahead of time, not allocating size in a more panicked manner when the trigger takes place, okay? So we're saying to ourselves, we have this setup, we've got two layers of confluence here. How nice is this setup? How attractive is this if it were to play? And what kind of size do we want to allocate to this trade? Then we can take it even further and say, okay, cool, we have two levels of confluence at the moment, but if we were to have 3 or 4 levels of confluence, then what would our size look like then? Okay, surely it changes and it gets more attractive. Now, those extra layers of confluence I'm talking about are either lower time frame divergences, or seeing that there's high delta present, being high negative delta, indicating that as we do tap into the demand zone, there is clear bid side absorption. So I won't go on about the pre-thought to the trade anymore, but I just want to show you guys that I am thinking about setups in advance, okay? And looking out for what I want to see, what my current size and risk would be on the trade, where my invalidation is, what the setup looks like, and if we were to get extra layers of confluence, how much more I would size up by. So I've just done two things here, okay? So we fast forwarded a little bit. We can see we're slightly lower than the range lows here. We've come down a touch. We're also on the 3-minute, okay? And the 3-minute was my primary time frame as the trigger for trade entry, okay? So this is what we're looking at. I'm just going to try and show you how this unfolded and just look at how I executed the trade in real time, okay? So we start coming down, we nearly test the range low, okay? And we come up here. All right, a little bit further. So this is an interesting picture here, okay? And this was a critical moment in my sort of shift in execution style, right? And the reason being is because, previously we had 2 layers of confluence, right? We had the range low to be swept into the liquidity zone, but I said, of course, I was keeping an eye out for a lower time frame divergence, and we can start to see that forming, okay? We don't have it, but we have the beginnings of what it may be, right? So we can see here that we have the candle bodies equal lows, and we can see the RSI and the awesome oscillator clearly lagging and at current putting in higher lows, okay? So we can say to ourselves, right, if this does keep pushing down, if we do get our trade trigger, then we are going to have a divergence in play as well, okay? Now, the reason I'm showing you guys this prior to the trade, prior to the divergence actually setting up, is because these are the sort of signs and clues that I'm looking for in real time, and they heavily influence my execution style, okay? So essentially now what we have coming together is a sweep into liquidity with a lower time frame divergence, okay? This setup in my playbook is called the Holy Grail, okay? When you have all 3 of those concepts coming together. And due to its heavily confluence nature, it's one of my only plays where I'm allowed to essentially scale limits, bids or asks prior to the setup happening, as opposed to, marketing or chasing in once I see the signs I want to see. So on that basis, I take my sort of scaled limits and I'm sort of bidding in the top 50% of this demand zone, okay? So we take that there, and this is sort of what our bids look like, okay? So we have layers of bids here, and we're confident and aggressive enough to be willing to step in front of the market, so to speak. And we want to see this divergence carry on. We want to see a wick in here. We want to see it, close back inside the range low, reclaim the range lows. And it's important to note that this isn't 100% of my position. This is probably 50% of the position at the top 50% of the demand zone. And I'll look for further adds once we get that divergence confirmation, once we start getting that range low reclaim. And essentially this is just the first set of installments on the trade position, okay? Okay, so let's see how this price action developed. So we have our scales in place, our limits, and you can see they got wicked into very nicely here. Okay, we start pushing up a little bit. And I think it was this candle close here when we get the wick down below and we get that sort of green pin bar formation. That's where I took my my second add to the trade, okay? So we've got first add averaging around here. We've got the second add here. So our average entry is probably around the 224s here. And at this point, we just place our stop. I think it was a few ticks underneath the low here, okay? So let's see how this trade develops once again. So we come back down, retest liquidity in that demand zone, and we go up and really take a reclaim to that range low there, okay? So we can see the structure that's formed here. We've got 2 taps into the demand zone, okay? We've had our bids filled, we've taken second entry here. We've been tested a little bit here, but the stop didn't get hit. And we can also see a really nice sort of structure across the RSI and the AO. So we've got this sort of running divergent structure on the RSI, and we can see, clear weakening in sell side momentum across the awesome oscillator. We've had our tap into the demand. We've swept this range low. We've now reclaimed it as well, and we're in full position here. Now, as always, a quick hop over to agar. Always using aggregated delta in pretty much every trade I take. And I just want to show you the picture over here, okay? So we've got that divergent structure here. We're now looking at the 5-minute, but we can still see clear negative delta on both the spot and perp markets, which, as you know, indicates market selling, whether it be fresh market sells opening or hard stops triggering into a passive recipient on the bid side, which indicates that there is clear absorption in this level here. And we have further confluence looking at the spot v perp dynamic as well. We can see that the move down was largely led by the perpetual side of things, which is exactly what we wanted to see for further confluence, okay? So we've got high negative delta, we've got perps leading the move down, spot not so much, and we can see the clear pivot here, okay? Okay, so back to the 15-minute chart here, and you can see our sort of preliminary position. We have our entry, we're in position, we're looking as a sort of TP idea to be the range highs. When I say idea, what I mean is we don't actually have a ask here to take us out of the position. Instead, we have an alert. I want to be monitoring the price action as we come into the range high. And also as we come into this higher wick here, okay, that wicked above the range highs. Essentially what I'm looking for is, does this level get swept? We start closing underneath. If so, I can cut the position, or do we have a clean breakout, continuation to the upside? If so, I'm extending this position upwards and looking for a more aggressive R on the trade, okay? Stop wise, we have our stop just underneath this first wick here. Okay, so a couple of ticks underneath that wick. And yeah, essentially we have our trade set up now, okay? So I've just fast forwarded the price action by a few days and we can see what happened here, okay? So we had, first off, a lot more ranging consolidation, price action fucking around. And then we had another tap into the demand zone. Full disclosure, at this point, I did believe that the stop was going to be hit. I thought there was very much a risk of this low being swept. And if so, I could have been stopped out of the position. So manually at this point, I dragged my stop just underneath this demand zone here. Okay, and I put it back up as soon as I can see this sort of relief in the price action. Now, some of you may be wondering why I did that. Okay, it's not a practice that I normally do. Essentially, the reason I did it is because I could see a 10-minute divergence here, and I could also see more negative delta being produced, which are essentially the signs I want to be seeing to be protected in my position. I still thought that this was going to hold, but the last thing I wanted was to be bottom ticked. Okay, so I just dragged it down here. And that's something that, as I say, I do rarely, but it can protect you from just being wicked out of position, assuming you are seeing the right signs to pull a move like that, okay? So we had obviously the second tap in, then a third tap slightly higher, and then just shot right up, okay? Now, again, I just want to flip over to the aggregated delta because that was my primary sort of trigger to exit the trade. So let's just move back to agar in this region here as we start breaking out because I want to show you the data and the delta dynamics over there, okay? So this was the picture, okay? So essentially the reason I exited this trade, I cut it manually, chased out of position, and the reason I did so is because as we started spiking up above that sort of range high, we had a huge amount of positive delta produced across both the perp and spot market. It was a nice trade, nice R. It took and tested a lot of patience, but eventually played nicely with very good return. So I wanted to bank my profits, take what I had on the table off the table, and secure the profits from the trade. Okay, so this was a trigger to exit. Okay, again we used the negative delta on the entry side and the positive delta on the exit side. And as you guys know, I'm sure delta is a very important tool in my arsenal for both entries and exits, okay? So just a quick flick back to the chart to show you what that end position looked like. Okay, we stretched our return from the trade ever so slightly by setting an alert, a sort of preliminary TP idea as opposed to a TP ask. And all in all was a fairly well executed trade. So that's it for today, guys. If there are any followers out there that have been keenly watching my videos going through the trading technical analysis series, then please, make some keen notes on this video, rewatch it, whatever you have to do, because this holy grail setup is exactly what I'm talking about when it comes to stacking confluence together. And I can safely say it's one of my favorite setups, okay? So I hope you guys garnered some useful insight from this video, and I'll catch you soon.